G'day guys, Jackson Millan, the Wealth Mentor. Hope you're doing well. We are still in Byron, hanging out. I'm probably going to get attacked by this plover that is losing its mind at me, if you can hear that strange bird in the background. So guys, I wanted to talk around the importance of understanding strategies that are going to help lift the quality of your wealth gain. There's so many strategies out there that most people just don't even know exist. And this actually limits their opportunities for able to grow their wealth. Now, this doesn't mean that we should be going out and doing sexy and sophisticated stuff. Much to the contrary, we should be implementing things that are tried and true that we know work. And we should be looking for opportunities to create what we call arbitrage. It's a way of manufacturing value by way of actually not taking any additional risk. This is why I talk about manufacturing financial freedom, because this is about having control over your trajectory. One of these strategies, which is very little known, is a strategy called debt recycling. It's a strategy that sounds a little bit weird. It sounds like it has something to do with those bins over there. It actually doesn't. It is talking about us shifting bad debt or non-deductible debt into good debt and then using that good debt to buy good investments. By way of doing this, it reduces our taxable income. It allows us to get more money in the market. It allows us to create more passive income to pay off our bad debt sooner. And all in all, it's helped many of our clients actually advance their wealth journey by years as a result of implementing this strategy. So let me give you a play-by-play. Let me use some real numbers here. Let's assume that you have a mortgage on your principal place of residence that you live in that is $900,000. And you have usable equity, so you have the ability to take out an additional loan facility of $100,000, which we use for investment purposes. So your total debt is $1 million, 900 bad debt, 100 good debt. We use the 100 in good debt and we go buy good quality index funds in international and Australian shares. We assume that that's going to produce us about 10% in return. We borrow the money at 3%. So there's now a 7% differential. The other thing we've got to consider is that the 3% on our bad debt, we have to pay in after-tax dollars. So let's say arbitrarily based on the amount of tax that you pay, that actually costs you 4.5% gross because we've got to earn money, pay tax to then pay the 3%. On the flip side, your good debt, your investment debt, is typically tax deductible depending on where you are in the world. And that basically means that 3% is now drastically cheaper as a result. So we now are able to create arbitrage. Our next focus is about paying off that bad debt as much as we possibly can. So we put all of our surplus onto the bad debt. So let's say we pay that $900,000 to $850 over 12 months. We've created $50,000 more usable equity. We, after 12 months, go to the bank and ask them to increase that $100,000 good debt facility to $150. We still have $1 million in debt. It's just $850 bad debt now and $150 good debt. And we take that extra $50,000 and then we put that into the portfolio as well. Now, the portfolio should also be producing yield. It should be providing you with dividends. So we've got an option. We can either take those dividends and actually use that to pay off the bad debt faster, or when interest rates are so low, it actually probably makes sense to reinvest them. But what we're actually doing is we're recycling our debt. We're building wealth faster. We're allowing that wealth to appreciate. We're getting the benefits of taxation and arbitrage, and it gives us the ability to manufacture financial freedom sooner. It's a really simple strategy that we use for our clients to help them use the rules for their benefit and help them manufacture financial freedom sooner. So if your ears have pricked up and you go, wow, this sounds like a strategy that I'd be interested in, or if you want to understand other wealth strategies that most people just don't talk about to help you add these to your kit bag and know when you should use them, how to use them, and the strategies that, what the impact of those strategies could be, hit me up in the DMs. We've got the space for 3 more private clients this month, and we're looking for service businesses that are doing over $30K a month that want to level up their money game, want to create a financial operating system that allows them to increase their profits, improve their cash flow, and then systematically turn business profits into wealth. So if that sounds like you, hit me up in the DMs with the word debt recycling. Let's have a conversation and see how we can help you push forwards. We'll chat to you soon.